All right, good morning everyone, and thank you for joining us for our webinar today. My name is Grace Shallow. I am the Communications Specialist at KatzPierz. Up on your screen right now, you will see a flyer for our upcoming webinar on Tuesday. Two of KatzPierz principals will be walking you through a practical guide to the 2021 COBRA Assistance Program. This program was included in the American Rescue Plan Act, which was just passed last week, so this is really recent and up-and-coming news in our ever-changing world. So I will be dropping a link to that registration page in the chat box, and we hope to see you next week. As for today, we are excited to be hosting Don Broekelmann, the Head of Revenue Operations and Strategy at Paytient. Don will be giving us a run-through of his product and leaving ample time at the end for Q&A. So in your drop-down menu, you should see a questions option, and we encourage everyone to ask questions during the webinar today, and we will be doing our best to get them all answered by the conclusion of today's event. And this webinar is also being recorded, so I will be sending that information out later today as well. But to start us off this morning, Lenny Katz is going to be giving us a quick introduction to who KatzPierz is.
Good morning, everyone. Thank you for joining us. KatzPierz focuses on employee benefits. We've been doing it for over 30 years now. Obviously, the industry has changed a lot and continues to change. When we work with a client, we really have 3 points of focus, improving financial performance of the program, helping run the program from an administrative perspective, and keep the program compliant. And today, we're really happy to be able to focus on the third thing that we focus on, which is how do we help employees become better consumers? And there's a whole lot around that having to do with education, having to do with advocacy. But we're very excited because Paytient brings something to the table that really helps employees with their end of the cost spectrum. No matter how good your insurance program is, there's always some costs, some out-of-pocket expenses that are incurred by your employees and their families. And we know oftentimes those employees put off care, put off diagnostics, put off testing because they maybe don't have the money in the bank to go get the test done and then pay for the test. So Paytient is a way that employers can help employees finance some of that. We're very happy to have Don with us today, and I'm going to let him take it over from here, and I'll be quiet. Thanks, Don.
Thanks, Grace. So I'll go ahead and share my screen. Let me get this set up here. Can you all see my screen now?
That's
Yes.
great.
Perfect. Lenny, Grace, I appreciate you having me today. Excited to talk to you all about Paytient and give you a little bit of an overview of how we kind of see the world, where we see things going, and a little bit of backstory on Paytient. So to get started, I'll give you a little bit of background on how the company was formed, our kind of problem statement that we see in the market, and I think, Lenny, you hit on it, to a T, right? It's the ability of employees to pay for their out-of-pocket expenses. And then talk through the product that we've developed, some of the nuances of that, and then leave plenty of time for Q&A. We are a relatively new product, so there are quite a few questions usually that go along with that. So happy to answer any of those at the end. So I'll take the next call at 10 minutes, walk through the product, and we'll go from there. So a little bit of background on Paytient. Founded in 2018. We were actually founded by a former hospital executive, Brian Worley. Our CEO spent close to 15 years running a hospital. One of the things that he saw in his own hospital, and obviously a hospital is a little bit of a unique case when it comes to offering insurance to their employees, but anybody who was an employee of that hospital could go get care domestically at any of their facilities, and just any of their out-of-pocket expense, they could pay with their name badge and pay that back through payroll deduction. It was just the way everybody at his facility paid for care. He tells the story that that was one of the benefits they actually removed for a little bit, and it was the only time they immediately put something back in. I think they had it back in within 2 to 3 months because everyone had just been accustomed to using it. It was their default way of paying for care. So he saw that, but at the same time, he saw the growing trend of employees coming in to get care at his hospital who simply didn't have the financial means to pay for that care. So seeing those two things, that acutely in his own institution really led him to want to bring to the market a new solution that would remove some of the preventable financial harm in healthcare. So, if you go to the doctor and you get fixed, but you come out of that and your finances are in a disarray, or you're further in debt, like that is better than the alternative of not going in and getting care, but it's still a suboptimal outcome. So trying to bring a new pool to remove costs as a barrier to earlier care is that is at the core of our mission, to try and democratize access to care. So if you don't have cash sitting around, you still have a way to get into the doctor and get the care you need. This stat in the middle of the screen is emblematic of why we exist. So even though your employees have benefits, 67% of employees have financial stress about paying out-of-pocket medical expenses. So those deductibles, co-insurance, co-pays, those are things that the employees simply are having a hard time funding. And if you think about that, the reason we're in this situation is everybody, consultants, employers are all doing everything they can to keep insurance affordable for everybody. But the bottom line is a lot of the cost sharing has ended up coming down to the employee level. This stat right here, says it all. Deductibles have increased at 8 times the rate of employee earnings. So if you think about that on a graph, like the deductibles have outpaced increases substantially. So it's causing this, what we call the deductible divide, which is the difference between what employees are expected to pay for care and what they can actually pay for care. We've all seen the stat, depending upon which numbers you look at, a $400 or $600 expense. For most average Americans, is something they can't, absorb in a way that's financially healthy. So you put that in the context of health insurance, which is often one of their larger expenses, it starts to create financial stress for them, right? And so they're faced with some choices. If they have an expense that they don't have cash on hand for, or they can't liquidate what little savings they have, they're looking at high interest credit cards, payday loans, emergency funds, borrowing against, retirement, or liquidating what savings they have. So all those are, I would say suboptimal resources that employees have to tap into. The other side of this coin, and Lenny alluded to it earlier, is employees simply not getting the care they need. One stat that really stuck out to us was there's a Federal Reserve study recently, and this was pre-COVID. 25% of employees have foregone care because they don't have the financial means to get that care. So the financial barriers to them getting care are just too high that they say, I can't do this, I'm just not going to go get the care. So that in face value is obviously, a pretty troubling stat. It's 1 out of 4 people. The other issue with that population in particular is that on proportion, they are more unhealthy than the general population of the employment. So, if you think future large claim risk or just the overall health of the plan, that group of individuals who are not getting care because of finances is a substantial risk pool for those large claims moving forward. So we want to find a way to be almost an intervention tool for that group, so your employees are not forced to choose between getting the care they need and financial security. The reason that we're in this situation is that very few employers or consultants that I talk to disagree with the problem. They've seen the numbers of increasing deductibles, increasing copays. They've all had employees in their office talking about the non-affordable care that they have to get with their insurance. The problem is, like, what do you do to fix that problem, right? The options currently are very costly, right? And so if you're looking at changing or addressing that problem in a meaningful way, the things you can do kind of on that right-hand column are radical plan design, right? Like go back to days of a $250 deductible, $500 deductible, paying your employees more to kind of shrink that deductible divide gap so they can, better afford the care, or do things like increase HSA contributions, right? Those are dollar for dollar outflows that cost an employer a lot of money. So given those options, oftentimes employers say, hey, I know there's a problem, but I don't really know what to do because we can't afford the alternative. And that is a choice in and of itself, which has some repercussions. They're just a little bit delayed, right? So short term, if employees are delaying care, obviously that's stressful for them. They're not feeling well, they're less productive. But if you fast forward that, into the future, in the long term, you're really looking at having a sicker population, right? It means higher amount of sick days per employee, substantially reduced productivity. And then again, as I hit on earlier, like that large claim risk is real within that population. So what we want to do is position Paytient as a low cost alternative to kind of bridge this gap in a way that makes financial sense for the employer, while bringing a new pool of resources to the employee so they can access that care when they need. So with all that being said, what is Paytient? So Paytient is an on-demand line of credit. So we can go into an employer and give every single employee that is employed by you their own line of credit. That line of credit ranges from, call it $500 to $3,000. And then anytime they have an out-of-pocket expense, they can, instead of paying with their card or their cash, they simply swipe our card. We have both a physical card and a virtual card within our app. We actually pay that provider in full at time of service. So the provider's made whole. They love getting paid earlier on that side of things. And then the employee simply picks through the app how they want to pay that back through payroll deduction. So let's take the example of a $400, ER copay that they have to pay. They simply swipe the card, we pay the provider. They can then say, hey, I want to break this $400 expense up into 4 payments of $100, 10 payments of $40, anywhere up to 12 months, they can spread that payment out. So it allows them to take some of these unexpected or frankly expected expenses and turn them into a payroll deducted payment plan that fits their own particular financial situation. So it puts them in control and allows them the ability to plan for those expenses over time and budget for them. The nice thing about this all happens with no interest, no fee, no credit check to the employee. So in the example of them borrowing $400, they pay back $400, not a dollar more. So no interest, no fees. It truly is a free loan to pay for care that they pay back through payroll deduction. So with that being said, there's also, when we talk about approved expenses, that's a bucket that we can dig into a little bit more as far as like what is an actual approved expense with Paytient. So Paytient will work at any provider of medical, dental, vision, pharmacy, and even veterinary care. So, when you think about your other ancillary benefits, we can kind of help bolster those up by giving another option to pay for any, deductibles or co-pays on those over time through payroll deduction and kind of, really reinforce those benefits. The other thing we've seen is a lot of employers who've been looking at maybe introducing some form of pet insurance for their employees. This is another answer to kind of address that for your employees, right? You give them a resource to pay for that. I can personally say I have 2 kiddos at home and I have an aging dog. The pet has cost me more over the last 6 months than my kiddos have. So for those people who have family members that are pets, this is a good benefit for them as well. So why put Paytient in, right? Like that's ultimately the question is like, what is the benefit to the food cost as a barrier for care? They're already in a stressful situation where they're not feeling well and they know they need to get care, and then they're sitting there weighing out, do I go get this care or do I, have to forego some other, item this month because I don't have money? Like that is not a situation that people like to be in. And so you can really give them a simple, on-demand and private answer to that problem. So to talk about the implementation, like an employee, without ever having talking to us or the HR team at your company, can download the app. They can spend up to their credit limit in all under 2 minutes. So they don't have to go ask for help. It is just there when they need it. This also to the point of, allowing them to control their expenses a little bit more, right? It takes some of those bumps in the road and really helps them manage those unpredictable or somewhat large expenses and puts them in control of how they pay that back, which in turn obviously reduces their stress and anxiety to accessing care. And then obviously access to care earlier and at lower cost makes happier, healthier employees, right? We all, including the employees, want to be healthy and we want them to get into the doctor earlier when these issues are cheaper to fix. I always give the example of, you have a toothache, you don't go to the dentist, it turns into a root canal, which, obviously costs more money. So you fast forward that and you start talking about preventative screenings and preventative care. Like there's a lot of value to getting those individuals into the doctor as soon as they can for both the employer and the employee. So I think on the employee side, it's pretty clear, we have no shortage of testimonials from our employees of people who have been in tough situations where they just simply couldn't afford the care. I had to go into the doctor a little bit ago, and right on the counter, they had a sign that said, if, full payment is due at time of service. If you cannot pay for that care, we'd be happy to reschedule. Luckily I had Paytient. It was not an issue for me, but if you think about that from the context of your employees, that is a tough situation to be in, and we can help them kind of overcome that. Again, a new pool of resources to really make that situation just a little bit more seamless for them. On the employer side, there's a couple of situations where we really see some benefit to this for the employer as well. In addition to the happier, healthy employees, mitigating that large claim risk in the future, we have seen increase in employee retention for these types of products. So there's both academic research from HBS as well as our own kind of testing that shows when you put a payment payroll deducted payment plan in place, it does increase employee retention. And a couple of reasons for that. One is if they have an outstanding balance and they want to switch jobs, that's just one more thing they have to deal with. We can talk about how we handle that a little bit later in the call, but so that's just one more barrier for them to leave. But also the thing we've seen with our product is once employees use it that first time, 90% are repeat users. So once they understand how easy it is to use, how seamless it is, in the fact that there is no hidden fees or hooks, which is something that we really have to fight going into an employer, is they feel like it's too good to be true. But once we get over that, they use it, and it almost becomes their preferred way of paying for care. So employee retention is a real value proposition. The other thing is, oftentimes you're having to go back and make plan adjustments, right? So whether that's increasing the deductible to keep the benefit plan affordable or reasonable, you can kind of mitigate some of those plan changes by obviously dropping Paytient in at that same time. So instead of saying, hey, we've had to take your deductible from X to Y and leaving it at that, you say we've had to take your deductible from X to Y, but we've also put Paytient in place to make sure you have an additional pool of resources to get the care you need without having to frankly resort to putting it on credit cards or not getting the care. We talked quite a bit about the reduction in frequency of large claims. Obviously, quantifying things that are avoided in the future is hard, and we can't do that. But I can say that we know that intervening in that vulnerable population who is already unhealthy and not getting care because of financial resources is incredibly valuable to try and, again, just remove one more hurdle for them to get into the doctor, get taken care of so they can remain healthy, productive employees and not have those large claims in the future. The other thing we've seen a lot of employers working on is migrating employees from one plan to another. Typically, this often looks like moving people to a high deductible plan. In that situation, oftentimes employees are just scared about that large number of their out-of-pocket expenses, right? They don't have a ton of cash on hand, so when they're looking down, $2,000, $3,000, $4,000, $5,000 deductible, it's scary for them to take that leap. So by putting Paytient in, you put a kind of a safety net in place for them that allows them to maybe make the jump to that product that is a little better fit for them and avoid some of those concerns with the large, out-of-pocket expenses. We've seen some initial testing when we've gone into employers and paired Paytient only with the high deductible plan, upwards of a 25% increase in enrollment in that plan. And we went back and talked to the employees about why they made the switch. They felt comfortable making the switch because they, again, had a safety net there that they knew if they had a claim that came in, that they had a pool of resources that they could tap into and weren't left, trying to figure out how to pay for that bill. So I'll kind of pause right there. I would love to open it up for questions as far as, how we technically work with the product or any questions you all have. Again, this is kind of a new product category. So oftentimes, there's a lot of questions just about the fundamentals about how it works, but I'd love to just hear your initial thoughts and see what questions you all have.
We do have some questions, Don. The first is, what happens if an employee is terminated and still owes a balance?
Sure. So if an employee is terminated, and that's usually one of the first questions we get, Grace, is, what does that look like for both the employer and the employee? So in that situation, the employee simply the employer simply lets us know how that John Smith is no longer employed with the company or whatever their name is. They both have a back-end portal and they can just email their account manager. We then reach out to that employee proactively and say, hey, we've been informed that you're employed by the employer. How would you like to make arrangements to pay this balance moving forward? That looks like taking some out of their last paycheck, and then also through our app, they can hook up their bank account, and we can do automatic draft on that still 0% interest payment plan. So we're very employee friendly on that side. Typically, if they've lost their job, there is oftentimes a need to extend out those payments, which we do all the time for them. Our thought is to like have them pay us just at least a little bit on an ongoing basis. And given the opportunity, usually people do pay their bills. The key to that is that the employer is not responsible for any of the bad debt. So, if they leave a balance and we don't collect it, no big deal. The employer doesn't have any liability in that situation. That all rests with Paytient.
Sounds good. And so must the employee, if an employer opts to enroll in Paytient, does every employee have to be enrolled in the group health plan to take advantage of Paytient?
Great. No, that's a good question. I'm glad I meant to hit on that earlier. So we have a lot of flexibility with how we structure Paytient going into an employer. So we can offer to everybody. We can offer to benefits only. We can offer to specific health plans underneath the employer offering. So we can really kind of segment the population based on what you're trying to accomplish with your overall benefits stack, and slice that population up into a way that makes the most sense. And we can have different credit lines for different groups of employees. So if you want to say, hey, on the high deductible plan, we're going to put in a $1,500 credit limit. On the traditional plan, we're going to put a $500 limit. So there's a lot of flexibility on that. And one of the reasons we can do that is we don't have any preferential tax treatment. So we have a lot of flexibility with how we kind of structure that in relation to the underlying goals of the group.
That takes me to my next question. The tax treatment, is employee payback post-tax or pre-tax?
It is post-tax. And part of the reason is because we have a wider view of what we consider an out-of-pocket expense. So, we have a lot more flexibility on that. But this leads into a good point of more how we work with an HSA, right? Oftentimes that's a question of like, hey, I've got an HSA. Is this a replacement for that? What does that look like? So we can talk about that for a minute. Really, we see coming in and working with an employer that has an HSA plus Paytient is the benefits, or the payment stack of the future for a lot of employees we see. So there's two groups of people right off the bat we can come in and help that have an HSA when you add Paytient in. So one is the group of people who are eligible for the HSA but simply cannot contribute because they're cash flow constrained, right? They don't have the luxury of putting aside $50 or $100 every month to put in the HSA to kind of take advantage of that. So that's a group right away. We can come in and offer them another pool of resources to tap into that's on demand, so they don't have to plan, right? That's one of the things that people either don't have the luxury of planning or they don't like to plan. We can really help those people. Again, when they have those expenses, we're right there, we're in their pocket, in their wallet. All they have to do is swipe it and they're good to go. So that's the first group. The second group are the individuals who are contributing already to your HSA, right? One of the things we see is they treat their HSA as a checking account and not necessarily a savings account. And, it's not one large expense that usually liquidates an HSA. It's these smaller incremental expenses over the course of the year that really deplete that HSA. So it's going back to zero every year. We can come in and sit out in front of that HSA, right? And so as they have these incremental expenses, we offer them an alternative way that's still financially healthy to pay for those expenses while kind of protecting that HSA, right? So hopefully over time, that pool of money can actually grow. You can invest it. You don't use it, fantastic. It's a great, kind of Trojan horse for retirement. But, really giving them another opportunity to insulate and protect that HSA is a big benefit. And then the third group that we can help that we don't necessarily like, it's not super beneficial, but just people who are, financially astute and just say, I'd rather finance stuff over time at 0% interest than paying with my own money, which is perfectly fine. And that's what the product is built there to do. So those are kind of three groups that we can help with specifically when it comes to the HSA integration. And we can, at that point, integrate with an HSA. So within the patient card or within the app, you have the patient card, but you can also hook up other cards as well. So if you think about an HSA or FSA card, you know, they can go ahead and say, let's say we have a $400 expense. They've got $200 in their HSA. They can go ahead and pay that first $200 with their HSA and then finance the balance. So it just, again, gives them more of like a wallet or purse of resources that they can tap into depending upon what their financial situation looks like.
Sounds good. So before HSAs become part of the conversation, what does the implementation process as Paytient look like?
Sure. So we've done, luckily we have a pretty astute tech team that has made this process pretty easy. So as far as getting up and running with Paytient, all we really need is an eligibility file. So you send over a list, usually it's an eligibility file you're sending to other vendors that has name, email address, phone number, address. We ingest that into our system. And then we have a go live date. So on the go live date, we basically mark all those employees as eligible. And then at any point, once they're live, they can go ahead and download the app, log into their account, and spend up to their credit limit in under, you know, call it 2 minutes. So very easy to use on the employee side. And then on the employer side, again, all we really need is that eligibility file to get up and running. We also take care of obviously trying to educate the employee about the benefit, right? Anytime you put a benefit in, one of the main things is you want to make sure employees use it. So we have a series of onboarding emails, videos that we send out to them on the go live date that introduce the product to them and explain the proper use cases for it and how to use the card. So we try and take as much of that, you know, lift on our side and make it as easy as possible so they don't have any questions on how to use it. And obviously one of our main jobs is to drive utilization once we're working with a partner, right? We want as many of the people that are eligible to be using that product and paying over time their medical expenses.
Hey, Don, this is Lenny. I have a quick question for you.
Sure.
You mentioned earlier that there's a range of how much can be financed, 500, I think you said, to 3,000. What goes into that determination? Is it group size? Is it employer preference? You know, how does an employer help, you know, figure that out?
Sure. So that is really something we sit down with the consultant and the employer and figure out what you're trying to do with your overall benefits. There is no, you know, secret sauces to, you know, we recommend X or Y on there. So it really depends on what you're trying to do. I will tell you that my recommendation, if someone comes to me and says, hey, we're looking at implementation, where do you think we should start? Is we start at $1,000. And the reason we do that, one, it's, you know, a meaningful amount of money to the employee. So it's a good pool of money, but also the way we see the card being used, you get that the biggest ROI on probably that first $750 or $800 worth of credit. Because again, it's not these large expenses. You do have, obviously, you know, there's a certain small percentage of the population that have large claims, right? But the majority of people that are in the healthcare plan, it's usually, again, death by 1,000 cuts when it comes to paying for medical expenses. So it's, you know, I need to go to the dentist, I need a copay, my kid needs new glasses. Like those are all the kind of expenses that we can absorb. Typically, the average transaction side is $200 to $300, and then they're paying it off over 3 to 4 months. So, you know, $1,000 is a good place to start. It's also a good price point as far as the PEPM we charge the employers. And then the other thing that allows you to do over time is if you do have to go back to the table and make, you know, additional plan design changes down the road, is you can say, hey, we've had to change, you know, again this year, we're taking your patient balance from, or available credit from $1,000 to $1,500. So it gives you some room to maneuver. We've seen quite a few employers that we work with, you know, year one, year two, they've been on $1,000, then, you know, they're having to make some change, and then they're increasing that to offset some of those changes as well. So we can go up to 3,000. We do have some groups who've said, hey, look, I just want to cover, my deductible is 3,000 for my employees, I want to cover that. We can absolutely do that as well, but it is, you know, a little bit more cost intensive. And to be quite honest, like the way we see people putting it on the card, it's not always valuable to the employee and the employer, but we can definitely do that.
So, hey, Don, so would I be correct in assuming an employer can't, I don't want to use the word discriminate, but say, I'm going to give a higher balance to these 3 people because I know they're really banging the plan and everybody else gets $1,000.
We can do that on a, level up from that, Lenny. So we don't do it on the employee level. We can do it on groups of employee.
Okay.
So if you say, hey, look, and we can segment the population because again, we don't have any preferential tax treatment. So that does allow us a lot more flexibility with what we do. You can say, hey, for example, my management staff and above, I want to give $1,000 to, the other group I want to give 500 to. So there's a lot of flexibility within that, but we don't allow the ability to burst like one credit line, for example, of an employee in that situation.
That's interesting. I actually have a couple of clients who would probably reverse engineer that and want to give more to the people in the warehouse and the truck drivers because they have less ability to come up with the cash and less to the higher paid employees.
Yep, and that's something we see definitely is they want to provide the resources to people most in need, right? And the thing I will say is it's interesting to see who actually uses the card too. It's not always the people you would think that need it. There's a ton of Americans living paycheck to paycheck, regardless of how much money they make, to be honest,
Sure.
on that side. But yes, we can definitely do that. One of the things we do look at, this may be a good kind of lead into pricing and how the economics of the product work, is we do look at turnover. Is one of the drivers when we're talking about like what is the PEPM. So we do charge a PEPM for the eligible population to the employer. That PEPM is based on 3 things. Credit line, obviously the difference between offering everyone $500 versus $3,000 is a different price point. The size of the group is another, obviously variable in that. And then the third is turnover. So how quickly are employees leaving employment? Because again, to my point earlier about liability, all the liability of bad debt stays with Paytient. So if you have a population that's turning over quite a bit, our exposure of not having access to the paycheck and being paid back timely, like that goes up. So we do look at turnover. So sometimes in those groups, Lenny, it may cost a little bit more to offer more to some of those lower paid employees because typically they turn a little bit more. But we can definitely work with that and figure out, a way that makes sense across the entire population and with specific groups underneath of it.
Okay.
And then usually the next question is, what does the PEPM look like, right? How do you make money? How much is this going to cost me? Very few people I talk to disagree with the problem or that we have kind of a unique solution to it. The challenge is, where's the money going to come from, right? So our PEPM, for let's just say a 500 person group, $1,000 credit line, you're probably looking sub $3, probably closer to $250 with reasonable turnover. So pretty, incremental on that side of things, but that will at least give you all a benchmark of pricing for the product. We have seen some clever ways of kind of structuring that to kind of offset that. A couple of those funding strategies, that we've run into of other employers are like, hey, look, I was looking at increasing my HSA contributions, right? So instead of saying, hey, you've got another $30 or $50 or $100 in your HSA, let's go ahead and say you've got your standard contribution, but we're also going to give you a $1,000 credit line along with that. So you can kind of leverage those dollars a little bit more efficiently to bring more impact to your employee base. The other side, if you're self-funded, is we've seen employers, doing some sort of cost sharing with this in the premiums, right? They know that their employees need this benefit and want to get it in place, but it may be another alternative on that. So there's some creative funding strategies that we can come up with when it comes to trying to, find the dollars and cents, because obviously, dollars are scarce when it comes to benefits. It's expensive and want to make sure you're making the highest utilization and leverage out of them.
Yeah, it's certainly, I don't want to say easy, but it's certainly simple enough to include the $250, $3, whatever, into a cost per pay period.
Sure. Yeah. No, absolutely. So, there's ways we can work on the funding side of it to find a way that makes sense. Obviously, everybody's situation is a little different. That's where we work with the consultant and the employer to figure out, what makes the most sense for this group. And again, like we want people to use the benefit. Like that's one of the first things we focus on is we want you all to get bang for your buck and have people actually use it. And our utilization is right in line. I mentioned that 25% number earlier as far as the people not getting care. Our utilization runs right in line with that, a little bit north of that, but that aligns with the population we're serving. It's people who wouldn't be getting care because they don't have financial resources, the ones that actually use Paytient, which is fantastic.
So our next question is, for employers that do opt in to enroll with Paytient, how much work is it for the HR team, and how does the payroll side get affected?
Right, yeah. Usually HR is understaffed from what we've seen, so obviously doing more work for them is not ideal. So it's pretty straightforward on that side of things. So I know people tend to get a little bit scary when they look at the payroll, but really they're already running deductions 9 out of 10 times in some fashion with payroll already. So we go in and figure out, how are you doing deductions currently? And then we design a process that works right alongside that. So there's usually 3 ways that we look at working with payroll. One, depending upon your payroll system, is just a direct integration. Like, just let our system talk to their system. We send the deductions in. They're all one-time deductions, meaning like, this paycheck, take this amount from this individual. So we can fly those deductions directly into your payroll system. Second is some sort of, EDI feed, where our system drops a file on a server and your system goes and picks it up. And that's low lift as well. And the third is just a manual upload, right? Most payroll systems, have the ability to do some sort of formatted file upload. So we kick a file out of our system that is designed specifically for what you need to upload. You say, hey, I run payroll on Fridays. I need this on the Monday before. That's in your inbox. You download it, upload in the system, and you're good to go. So usually between one of those 3 methods, we're going to cover 95% of the use cases out there. And again, we really try and focus on just finding out what their existing workflow is and dovetailing right into that. So it's not new work on that side of things. So our system takes care of all the heavy lifting and aggregates all the payment plans, all the balances, and really we just send over each pay period what the deduction is for each employee. And oftentimes there's multiple payroll groups, right? That's one thing we see a lot across the board, is that they may have some biweekly, some monthly, some weekly. We can accommodate all that as well. So pretty straightforward on that side. In addition to the technology, we do have account managers, right? So every employer we have has a direct resource that they can contact in our team. If they have any issues with the payroll file, any questions, there's a human being that is right there and ready at their disposal. Typically, once we get through the first payroll run or two, they see the process, they understand how it's running. The account managers are usually just checking in and seeing how things are going. Usually pretty hands off once we get through the first couple.
Sounds great. And so when employees do get their patient card, are they able to use it on some outstanding medical bills that are from previous treatment?
They can't. So think about it the same way, instead of using their credit card, they use our credit card. So any way a credit card can be used, think about point of sale, paper bill, paying online, they can use that patient card. So as long as the bill is for a medical, dental, vision, pharmacy, or vet expense, as soon as they go live, they can go ahead and pay that off. And we do see that quite a bit when we go live with an employer, where we'll see a rash of, usually it's like $500 to $750 right off the bat, where they've had something they've been trying to pay off. They go in and do this, pay it off, so they're done dealing with the provider, they're made whole, and then they just pay it back through 0% interest. So they can use it the same way they can a credit card, and can pay off some of those outstanding bills. It's a good question.
Mm-hmm.
Hey, Don,
and so,
sorry, Grace.
no, go ahead.
I want to put a finer point on the PEPM, if I could, just to be clear. It's based on eligible. It's not based on who actually signs up, correct?
That is accurate. So it's based on the eligible group. Again, we can kind of segment that group if you're trying to control costs with one, to limit it to a certain set of the population. But it is the eligible population that we charge for. And the reason we do that is at any point when they're in that pool, they can download the app, spend up to their credit limit on their own. So it truly is on demand and accessible whenever they need it. So that is why we do charge for the eligible population. And that helps us keep the affordability down as well, to be honest, as opposed to having only the people who use it carrying balances.
Makes sense.
Great.
So, Don, earlier in the presentation, last question, you talked about the expenses that employees are able to use for Paytient. So do you think you can talk a little bit more about how those expenses are approved and what control employers may have during that process?
Absolutely. So yeah, we do have intelligence built into our card. So whether it's the virtual card or the physical card, every time a member swipes that card, as a transaction comes over the wire, our system looks and says, who is trying to make that transaction? And so we use merchant codes. We're built on top of Visa. So anywhere Visa's approved, we can work. And if it comes over through our network and it's a merchant that's identified as vet, pharmacy, vision, medical, dental, or vision, transaction goes right through. No issues whatsoever, just like a normal credit card. If it comes back and it's Best Buy and they're trying to buy a TV, that transaction is declined on the spot. And then what happens, that kicks off a workflow on our end for our customer care team to reach out to that employee, and we use it as a re-education opportunity, right? To let them know, like, hey, these are the approved ways you can spend this. But it also gives us an opportunity. Occasionally, there are people who are mistagged in the network, right? And so if it is, a provider that it should go through, when we talk to them, we can go ahead and kind of push that transaction through as well. So we, take those as learning opportunities, either make our system smarter by getting people properly tagged, or by letting them know, like, hey, you can't buy a TV with this. It's only for approved expenses, being, medical, dental, vision, pharmacy, or vet. And we do have, when we go live with an employer, we do have people test the system, right? It's inevitable that when you extend people credit, they're gonna be like, what can I really do with this? And so that's one of the reasons we use it as a, learning opportunity to re-educate them, is like, we want them to use it on the right expenses.
Yeah, well, the good news, they're not spending the employer's money. If they squeeze one through, it's still their money and they're repaying it.
That is accurate. And so it's their money that they repay, and it's our risk too. So like, if something does get through, like, anytime you have a system, there are going to be nooks and crannies where people can kind of get in and figure out a way around it. And we've erred on the side of flexibility for the employees at the expense of our risk, to be quite honest about it, because we want them to be able to use it when they need that care. And we didn't want to limit. One of the examples is a pharmacy, right? For example, they're at Walgreens. If they want to buy their medicine there, it'll work at the pharmacy. It should not work at the front desk. But if they want to put a bag of chips or something in there, we don't have any way of stopping that. But we'd rather, again, to your point, it's their money, our risk. We'd rather allow everyone to have access to that for the, non-bad actors. And if something gets through, again, like, we try and avoid that with guide rails. But again, it's not the employer's kind of responsibility at that point as well.
Yeah. Well, that was our last question. So is there a specific way that employers who are interested should reach out to you?
Yeah, I think if, Lenny, if they want to kind of, talk to you all, and, obviously our website has a contact form as well that we can kind of engage with, but typically we work through our broker partners to try and make sure that we have, a comprehensive view of what you're trying to do, and figure out a way that we can kind of make sure that it makes sense with the overall benefit stack. So yeah, we'd love to, if it's something that's interesting, we'd love to work with you and explore further what it could look like for your employees.
Great.
Well, thank you so much for being with us this morning, Don, and sharing a lot of information about a helpful tool.
No, I appreciate you both putting this on, and giving me some time to talk about Paytient. I loved answering the questions. It's one of my favorite parts.
Thanks, Don. Appreciate the time. Thanks everybody who joined. Hopefully they got value out of this, and they'll give you a call. Give us a call to give you a call.
That sounds like a great plan, Lenny. So we'd be happy to work on some cases together. If there's any questions afterwards, obviously, Lenny, reach out to Lenny, and then we can kind of facilitate a conversation or make sure you have all the resources we need to make sure you're well informed, and appreciate your time. Hopefully you have a good rest of your day and a good rest of your week.
Thank you. You too.
Thanks, Lenny. Thanks, Grace. Appreciate it.
Thanks, everyone.
Have a good one.
Bye-bye.
Bye-bye.